note, Manish Sonthalia is with us now. He's CIO in Emkay Investment Managers. Manish, good to have you with us here. Thanks very much for your time. Just a quick assessment of earnings so far, Manish, for the third quarter. More downgrades than upgrades, more upgrades than downgrades, or it's pretty much in line and nothing much. What's your sense?
Prashant, I think the numbers have come bang in line. Broadly, you see the sectors that have led the earnings growth is your banks, your automobiles, and oil and gas. Now, apart from this, I think broadly FY25 and FY26 numbers FY25 would broadly see a 1 to 2% cut. FY26 would be broadly in line with what the preview numbers were like. So I think there's not too much of a disappointment. Of course, on the private sector banks, it's very difficult to understand the level of derating that this space is undergoing. And that's probably a drag on the overall Nifty as well, the Nifty 50 and the sensex. But, individual sectors, I don't think too much of a downgrade in any of the major sectoral earnings post the earnings season. It was the fag end of the earnings season now.
Okay, well, no major downgrades coming in. By the way, early signs of some profit taking in the PSU space. I don't know if this is actually going to take place, but look at names like IRDA, down almost about 5% odd. You have oil marketing companies down about 2.5%. Very, very early signs of, some money being taken off the table in this space, something like an NHPC, etc., down almost 1.5–2%. Manish, thanks for joining in. I wanted your thoughts on, the PSU banks particularly, because, SBI sitting at a fresh record high. So from a portfolio standpoint, how do you look at it now? What's the best way to approach it?
I think there's some deep value in the public sector banks, and now that the valuations of the private sector banks also seem to be correcting quite a bit, I would believe that once liquidity conditions ease out, you would have a better handle on the cost of funds as far as the PSU banking space is also concerned. Of course, one has to deal with tier 1 capital because most of them would be coming in to raise capital. So PSU banks where there is a scope of growth without having to dilute, would be the ones that would be more suited. Those who have already raised the capital, they would be the ones to really look out. And those who have a stable liability franchise, that is the CASA ratio. So guys who are having actually good CASA ratios and a decent handle on cost of funds would be the ones to go. But I think the preferred bet would be the PSU banks, because you really don't know when the private sector banks derating would stop. I mean, it's just mind-boggling as to earnings growth, coming about, but the valuation derating just happens every day. So from that point of view, I think margin of safety still appears to be in the PSU banking space.
Okay, all right. Hi, Manish. Good morning. Since we're talking about PSU as well as private banks, let's talk about the insurance companies as well. Suddenly, those companies have made a good comeback, including LIC. Your view on that space?
Well, LIC was quite undervalued and they reported some blockbuster numbers as well. And the entire PSU bank as a whole and the LIC and the insurance companies as a whole, whether it be the health insurance companies or the life insurance companies, underperforming for quite some time as a pack due to multiple reasons, due to higher provisions on account of claims or combined ratio actually not coming in line with expectations. But now that is behind us. There has been some increase in tariffs as well, and I think the growth would broadly come about for the entire space. And within that peak, the PSU ones were the really hated names, so to speak, and offered deep value. I think that is now correcting, and that is what we are seeing in the marketplace.
Manish, so just I know you don't want to talk about individual stocks, right? But I have to just get your thought process. One is Paytm. There's a large kind of a setback which the company suffered. As an institutional money manager, what do you do? I mean, if you own it, do you write it out? Yeah.
So I'll give you a generic answer on this. See, platformized business are the way to go. Now, whether it be the food technology space or whether it be the financial services space, so on and so forth, there's non-linearity that's going to happen. across the board, ed tech, beauty tech, or consumer tech, and so on. So platformized business, there's no major problem. But I think regulatory, checks and balances would need to be adhered to. And of course, that is an area where individual investors would really have to do their research as to the companies which are actually adhering to the regulatory issues, or whether there's been some breach, etc. But otherwise, I think platformized businesses will have non-linearity going forward.
Okay. Any place or any space that you would be cautious of right now? Because, this market has defied all forms of wisdom, right, over the last couple of years. Everything that didn't work for the last 10 years is working now, whether it's defense, whether it's PSUs, whether it's railway stocks. So is there any place that you're cautious on right now where you feel like, okay, if you've made money here, perhaps the time has come to, take money off the table?
See, India is in a bullish phase. All sectors and individual stocks would likely do well, but you got to find value. I mean, it's not growth at any price. That really won't work. So I think what the markets are really telling you is that some of the spaces exhibited growth, but because of the nature and texture of some of these companies, public or public sector or thereabouts, they were quite an ignored lot. And now that's correct. So I think one of the spaces where there's still some disappointment, and primarily post the budget, was that the FRBM got enhanced to 5.2%. Of course, there was little money in the liquidity side. So the consumer staple space, I mean, we thought that before the elections, there would be some relief in the hands of consumers. But I guess that would have to wait post the election results and, once the final budget comes through. But I think the infrastructure spending side, I mean, we are all gung-ho on that side, but one has to find value, where there is value vis-a-vis the price that is being exhibited on the screen.
Okay. All right. Manish, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here. That's Manish Sonthalia of Emkay Investment Managers. But